Alphabet has been my top stock to buy since the start of this year. The primary reasons behind my top ranking for Alphabet stock are its durable revenue growth opportunities across three of its largest business segments, including search, YouTube, and cloud. Furthermore, those are businesses that have proven to be lucrative profit drivers with limited investment capital required. And finally, the company's valuation compared to its prospects are favorable. Let me share each of those with you in more detail here. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So far, year to date in 2024, Alphabet's share price has trailed the S&P 500 index. Alphabet's GOOGL shares, which are the ones I'm recommending, are up 17.11% in 2024, while the S&P 500 index is up 19.31%. Now, I highlighted one of the reasons I like Alphabet stock is because of its strong revenue growth opportunities, and you can see that here demonstrated in its 10-year revenue growth. $328 billion in revenue in the most recent trailing 12-month period. That's up from around $80 billion in revenue in 2015. And given the tailwinds behind Google Search, YouTube, and Google Cloud, investors can be reasonably confident that Alphabet's growth will continue for the next several years and perhaps for the next decade. Now, I know there's been a lot of news recently about Alphabet or Google's search engine dominance and the potential for competition coming in, especially from Search GPT and Chat GPT. But if you look at Alphabet's or Google's market share, according to Statista, Google boasts a 91% market share in search engine worldwide. And so, yes, perhaps there are some risks to it losing some market share. It might be a good thing for Google to lose some market share in search. You've seen Google face a lot of legal attention, legal scrutiny because of its market-leading share. And I would argue this is the closest thing to a monopoly I've seen across several business segments worldwide. A 91% market share is a massive market share, and Google has held this for the better part of the last decade or more. And so, sure, there's going to be some competition that takes aim at Google's market share lead in search engine. However, its share lead is so large that even with a bit of a decrease, even if it were to fall from 90% to 80%, I think the benefits of its market lead will persist. In other words, you typically get some benefits for being the market share leader in an industry, and those benefits result in higher profit margins, greater pricing power, etc. With Google, even if it were to lose, let's say from 90%, it goes down to 80% market share, which would be a massive loss. Even if it were to decrease by that much, it would retain much of those advantages from being the market leader. So it's not like if it loses this market share, it will lose those advantages. It will just put the company in a more favorable position with regulators to offset some of the downside from losing that large of a market share, which I don't think it's going to happen. I don't think Google's going to lose that much market share in search. But even if it did, it would still retain a lot of those benefits from being large scale. However, it will lose that revenue, which will not be good news for Alphabet stock investors. I don't think that's going to be the case, however. I also highlighted how Alphabet's businesses and across its segments, it's lucrative. They generate great profit margins at relatively limited capital investment required. And you can see that with the company's return on invested capital and return on equity, which are both roughly 30% as of the latest update. And you can see that improving over time because the company doesn't need to continuously reinvest into the business in order to generate growth or to generate profitability. The company's investments in technology and research and development have come in the earlier years, and the company's made great investments and acquisitions. If you recall, YouTube was an acquisition the company made. So Alphabet has been very good at generating return on invested capital. What's more, in recent years, Alphabet's gotten serious about controlling costs, which is something the company had not done up until late 2022 and early 2023. That was something that really enticed me about Alphabet. All the while I've liked Alphabet stock, but I hadn't rated it a top stock until 2024 because Alphabet finally got serious about controlling costs in late 22 and early 2023. So that earned it a spot on my top spot on my list of top stocks to buy, because now you combine a business with excellent growth opportunities, lucrative opportunities with limited invested capital required, with the management that's becoming more serious about capital allocation. That all made for a really, really enticing investment opportunity in Alphabet stock. Now, looking ahead, the Wall Street analysts that are following Alphabet stock, they expect it will grow its earnings per share by 20% each year over the next 5 years. That would roughly be what it earned in the previous 5 years, which was just a little over 24% in that time. Now, when I'm looking at a growth stock, I like to compare the forward earnings per share expectations. I like to compare that with its forward price to earnings ratio, and I like the earnings per share expectations to be higher than the forward price to earnings ratio. And for Alphabet, you do have that situation. Its forward price to earnings is 18.81, whereas its earnings per share expectations are 20.5%. Now, that metric alone isn't enough to make a decision on making an investment or not, but combined with everything else, that valuation, that relatively cheap valuation, makes Alphabet stock that much more exciting. So for all of these reasons that I've mentioned, including excellent and durable revenue growth opportunities, lucrative business segments with limited capital investment required, and a relatively cheap valuation when compared to its prospects, those are all reasons why I've rated Alphabet as my top stock to buy right now in 2024. Of course, I always recommend to do your own research and just to take this as a starting point to conduct your research and do your due diligence on Alphabet stock. These videos are for informational purposes only. Everyone should always do their own research before making any purchase decision regarding stocks. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.